I'm like a holograph. I'm actually transmitting this message from the future, right?
You're seated in front of me though, right?
Maybe, but my mind for sure is 18 months ahead.
Okay.
And 18 months ahead, let me tell you, I see tumult. I see chaos in the global economy brought on by policy errors, I believe, and by a misunderstanding. I mean, why are we talking about a misunderstanding? It has always been accepted, if I have to quote the almighty Milton Friedman, inflation is what? It is a monetary phenomenon. Everywhere and always, it is a monetary phenomenon, okay? Where is the monetary phenomenon? So my analogy would be, think of the economy as a large purse, okay? And prices, everything you spend, prices are typically 10% greater than last year. You need a 10% additional, set of cash, notes and coins and credit cards and Apple Pay to grow by 10. If it's not growing by 10, then discretionary spending, your Netflix account, or your driving, or your eating out, takes the pain. And so as we move forward, I see a transition as people with no choice rein in their spending.
And you think the stocks that will get, or the companies that will get hit most are, we've already seen the disastrous results from Netflix, Apple, like who gets hit the hardest here?
Well, actually, money gets hit the hardest. And this is where it's confusing, because there are actually three forms of money. There's only one that we ever think about, which is your local bank, and it's regulated by the Federal Reserve, and your deposits are insured by the Treasury, and it's like homespun apple pie is wonderful. Except that is just one, not tiny, but one aspect of money, okay? And it's not been expanding for the last 15 years, okay? There's another form of money, which I call laundromat tokens. It's pure public money. It's the Federal Reserve coming in and creating all these banking reserves. But these banking reserves are latent. They're not real money. It requires the banks to say, yeah, I feel really good. I'm a funky risk taker. I want to lend to the household sector in America. I'm not doing it. So it's late. It could be, but it's not. And then the final form of money, and this is where, to the crux of your question, is this kind of matrix world, this offshore repo market, euro-dollar market. Now they've been printing a lot of money, okay? And that's where we see inflation, but we see asset price inflation. The Federal Reserve's pivot to these higher and higher rates, what's happening is if you will, is pulling the oxygen that supports this elevation of asset prices. And so they're tumbling, and as they fall, the collateral that supports the real banking system, we're seeing monetary destruction. And that's why I see dead people when I look into the future.
Dead people?
Dead people. Metaphorically dead. Let's put it this way. In the 1970s, there's a lot of reference to Paul Volcker. And infamously, he squeezed the peeps and we had 20% rates. But debt to GDP was roughly 1 times. The stock was 1, the ratio was 1. Today that ratio is 4 times. So I'm saying maybe terminal Fed funds rate is 5. 5 times the 4 gives you the 20. But even at those levels, it's going to feel like 20% given the immensity of the debt. So your American household, your mortgage rate now is 7%, plus 7%. Are you buying another house?
No.
Most unlikely. My point, my point again is, when was the last celebrated wise decision of the Federal Reserve? Okay, it is typically led by the collar of the Treasury market and the curvature of the Treasury market. Treasury market, the recession. We are in a recession. We have recorded consecutive quarterly declines in economic activity. The Federal Reserve says, what recession? The recession that we've recorded. Anyway, it's going to continue, and the Treasury market is so predictable. Panic is the most subversive statement you can make. So I'm brought onto your show in the company of other experts. I'm slightly different. I don't wear a suit. That's a clue, right? Because the other experts are invested in the status quo. The status quo is that tiny coterie of the 1% get richer and richer and richer because they've aligned themselves to the economic policies of the mercantilist nations such as China. It enriches China and enriches Wall Street. But you folk at home, how do you feel about it? Because you're getting screwed.
Absolutely.
Okay? So that's why I say panic. Burn the stables. Okay? You don't have to be invested at all times. Take a break, because I saw this in 2008. It's speculation on my part, it's conjecture on my part. I'm not, my success rate is not 9 out of 10, it's like 5 out of 10. 5 and a bit out of 10.
Yeah, that's still pretty good though. Right.
Yeah, pays the bills.
Yeah.
Investing presently is like licking honey from the razor's edge. And by that, what I mean is, so you mentioned gold.
Yes.
Gold. There were a few people that could see the approaching storm of 2008 and the bankruptcy of the financial system. They purchased gold. Gold, the least risky asset you can think of. Gold halved in value. This is what, when the storm finally hits, it comes on shore, there's a liquidation moment where everything is sold.
Right.
Okay, so actually, where I am, typically the Fed has caved in on like 20% wise, S&P down 20, J1 power went, I gave up, okay, like, you got me, I was wrong, okay? We've been down 25, Jay's like, nope, not happening. So I believe the market's gonna go, well, let's go 35%. Boom, 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 Mr. Fed, are you listening? Nope, inflation's still 7-8%. Is it 45? Somewhere between 35 and 45%. I might start to engage and touch a few risk assets.
What are they doing?
Well, listen, the fundamental problems, they talk about financial conditions as opposed to monetary conditions, okay? I would make a bold claim that there's no more than 5 people in the world that understand money, right? They don't work for central banks.
Right.
By and large, they don't work for investment banks either, okay? That is the root of the problem. They are looking at the world through one of those channels that we discussed, those channels of monetary intervention, and they're missing this matrix-like misadventure, right? And also, they're trying to solve a political problem. The inflation that we have is a political problem,
Right.
which was we had a pandemic.
Right.
The Fed and the Treasury sent
Right.
out stimulus checks at a point when the industrial
Exactly.
world was closed. Okay. Now, I want to really ram home this point because it's very analogous to 1948. U.S. CPI was running at 20% in 1948. Now we don't talk about the hyperinflation of the late 40s. Why? Because we are the mother of all recessions and there was no monetary accommodation, which meant a year or so out, the inflation was more like 3. We are in a depression.
Okay.
This is 1937 and the Fed has the audacity to tighten in a damn depression. Bad things are gonna happen. Sexual fantasies of men in suits and this whole notion that the world is broken because of the supremacy of the dollar, right? But to your question, we are so close to a denouement of the present system. What is the present system? We've moved from a gold standard to a dollar standard. Okay? Both were undone by cheats, sovereign cheats. Back in the 20s, it was here. We were cheating in this country because the currency, when gold flowed into America, it was sterilized. The modern equivalent is our Chinese friends, right? They've been sterilizing all of their money, robbing their household sector, and dumping it into treasuries, okay? That's the fundamental error. That's why we have this deficiency of demand. It's why we have Trump. It's why we have anger in the heartlands. That has to be addressed. That's the denouement. Now, that's why I was willing to say to you, this could be worse. This could be worse. Let me be very specific. We're now on the weakest performance of the Chinese currency year to date, okay? It's 720. Now, during NAFTA, which was 1994, it devalued to 9. Today it's like 730. It's profoundly the wrong rate, and yet it might go to 9. 9 means it's getting weaker and weaker. That would bring on an a deflationary catastrophe, the likes of which we've never seen. Again, it's politics, so they would be the Chinese Communist Party, right? And they came to power, or they enjoyed this economic supremacy after the misadventures of the Asian tiger economies, Thailand, Indonesia, et al. Yeah? And their problem was they allowed a consumer household boom to make them vulnerable. And what happens? Political leaders got kicked out, and the Communist Party like, we ain't doing that here. We're all about longevity. Well, I would come back and say it is another nail in the coffin of inflation because there's a great hope, a great expectation that fiscal policy might give us future inflation. Well, the UK economy, which is stagnant, the stock index is below what it traded in 2000. It's below what it traded. Let me say that, it's below, right? And the new government had the temerity, the audacity to suggest that in a depression we should maybe do a fiscal expansion. And everyone went, and who's everyone? The IMF and the central banks went, not on our watch. Right? We are being condemned to the errors of 2010, 2011, and 2012. An error is fine, but repeating an error begins to look like insanity.
This is my first time speaking with you, so I'm interested to get your thoughts on cryptocurrencies, and is that a solution? Is that a way out of the system for you?
So I keep mentioning this depression word. Thankfully, we've only had 4. They're hen's teeth-like, they're rare. We had one in 1825, let's call it 1870, 1930, and today. We overcame those difficulties because there was innovation in money. So when you say to me crypto, I think of blockchain, and I think of technological advances, and I think of the 9 million of debt I have with a French local bank in the Caribbean, and I think of all the papers, because they don't trust me, and I don't trust them, and it's like getting, you know, if you're a naughty schoolboy and the teacher says, I want you to write 100 times, I will be a better schoolboy. That's effectively what I'm doing. Blockchain offers the opportunity where it's like, we trust each other. Boom, it's done. So possibly, but that's not Bitcoin.
Right.
Bitcoin is a speculative asset whose value is determined by the upside in other speculative assets. And that upside just now is just not there. But, you know, I did take a decision in 2015. You know, I was a prominent spokesperson for the financial community during the European sovereign crisis. Mm-hmm. And there I could see that the problems which were engulfing politicians were perhaps greater than their ability to respond. And when you ask me about Liz Truss, the UK Premier, getting kicked out, that's further evidence. It's bigger than them, right? And so I was like, I give up. I'm going to a gated community on this tiny island in the middle of the Caribbean.
And are you happier?